Welcome back to Starting from Scratch, my 8 episode journey created especially for complete novice investors. I'm Patricia Saylor, managing partner of Saylor Financial Fundamentals, and I'm excited to guide you through today's episode. We'll begin with Alyssa's story, a journey that may feel familiar to you, and by the end, you'll have a vocabulary list, review questions, and a homework assignment to reinforce what you've learned. Let's dive in. Today marked the start of a generational transition, and Alyssa was ready. She got comfortable and opened her laptop. After years of holding on to the Coca-Cola stock her grandmother had gifted her as a child, she realized it was time to take her investing a step further. She started typing questions into the search bar. Some of the questions revealed her lack of background knowledge. How do I open an investment account? What's the difference between an IRA and a Roth? Are capital gains the same as taxes? What is the S&P? You don't need to be an expert to start, she remembered her grandmother saying, and Alyssa felt a wave of generational confidence. She could do this. She knew she wanted to buy more shares of something, but so many questions swirled in her head. Can I add funds to the account that holds my Coca-Cola stock, or will I need to open a new account? How does this work, she wondered. Some of the answers she found as she searched included words she didn't know, so she started jotting down key terms and concepts she wanted to learn about, including kinds of stock and kinds of investment accounts. Understanding the stock market was about building on a legacy, and she envisioned the day that she could pass on this knowledge to her niece. It was time to invest in her education and take charge of the next steps on her financial journey. Like Alyssa, you may have basic questions about investment, so that's where we're going to start. The first principle of growing your money is that you want to make a profit, but what does it mean to invest for profit? Investing is using your money to make more money. When you borrow money, you have to pay interest, which decreases your wealth. When you invest, you get paid to have money, and you're growing your wealth. You may invest, for example, in a home, real estate, starting a business, or buying stock in other companies. Your new car, on the other hand, usually decreases in value the longer you own it. So it's a purchase, and it's probably a purchase you need to make. But your new car is not an investment. There are lots of ways to grow your money, but I'll be primarily talking to you about growing your wealth by investing in the stock market. Note, I know you want to get to the important part, how owning stock can actually make money for you. In episode 5 of this series, I'll talk about 3 ways to use stocks to grow your wealth, but we're going to cover some essential background knowledge first to get you ready for that. In this video, we'll be covering the difference between shares and stocks, public versus private companies, stock tickers, share prices, spoiler, lower price stocks are not always a bargain, and market capitalization or market cap. Let's start with exactly what a share of stock is. Stock refers to ownership in a company, while shares are units of that stock. If you say, I own 5 shares, I'll ask, 5 shares of what stock? And if you say, I own 5 stocks, I'll want to know, what are the 5 companies you've invested in? You can own McDonald's stock, and the value of your stock is determined by the number of shares of McDonald's stock you own. The cost of each share, however, is not that important. We'll talk about that in just a moment when we get to the concepts of share prices and market capitalization. You might also own stock in other companies such as Ford, General Mills, Amazon, AT&T, or Sherwin-Williams. The price of a share of stock varies greatly among different companies. Again, I don't want to jump ahead too fast, but I want you to know that to invest in stocks, or more specifically, to invest in or buy shares of a company's stock, you will need to set up your own brokerage account, which I show you how to do in episode 7. But for now, let's discuss what kind of stock you can buy. A public company is a corporation owned by shareholders. If you buy shares of stock, you become one of those shareholders. Shares of the company may be bought and sold in the stock market, and there are rules and regulations governing this process. Most public corporations were once private companies that, after meeting all regulatory requirements, opted to become public so they could sell shares to raise money or capital. This change from private company to public corporation is called an initial public offering, or IPO. After the IPO, the shares are bought and sold on the open market. So you can buy shares of the Coca-Cola Corporation, which is public, but not Lego, which is privately owned. Now that you know what kinds of companies you can invest in, let's take a look at how much stock costs. Companies bought and sold in the stock market are identified with tickers. A ticker is a symbol made up of letters and or numbers that represents a stock. Often the ticker symbol is an abbreviation of the company name, but this isn't always the case. Most companies get to select their ticker symbol when they become publicly traded. Take a look at these 10 tickers and 10 logos. Some of these may be familiar to you, and some may be new. Pause here for a second and see how many you know. AAPL is pretty clearly Apple, and Google changed their company name from Google to Alphabet, but retained their ticker symbol GOOG. Single letter tickers like F for Ford and T for AT&T usually represent older companies that have been exchange traded for a long time. Lots of people guess that BA stands for Bank of America, but it's really the ticker for Boeing Air. Now, let's talk about share prices. Initially, the price of a share of stock is set during the IPO or initial public offering, but later, share prices are affected by supply and demand as the shares are bought and sold on the open market. Some shares of stock are expensive and some cost very little, but this price difference doesn't have much to do with the actual value of a share of stock. When a company goes from private to public, the value of the company is divided into equal shares for sale to the public. The total value of all the shares is the company's market capitalization. A company whose value is $100 million may want to issue or sell 1 million shares at $100 per share, or they may want to issue 20 million shares at $5 a share. Whether you buy 2 shares for $100 each or 40 shares for $5 each, you have paid $200. Since the company's market capitalization is $100 million, either way, you own a 0.0002% slice of the company pie. You may have heard of small cap or large cap companies. In this case, CAP is just an abbreviation for capitalization. Small cap companies have a market capitalization typically between $300 million and $2 billion. They are often newer companies with high potential for growth and higher risk, such as emerging technology companies or regional firms that have not yet expanded widely. Large cap companies have a market capitalization typically over $10 billion. They tend to be large, established companies and are usually more stable in their earnings. Examples of large cap companies could be Apple, Microsoft, and Coca-Cola. Now that you have a foundational understanding of these important concepts, you're ready to dive deeper into how the stock market can help grow your wealth. But first, I want to make sure you have fully grasped all the information we have covered so far. You remember I'm a teacher, right? I'm not going to give you a grade, of course, but get ready for a vocabulary review, a short test, and a brief homework assignment for you to complete and put in the comments. Then, in the next episode, we'll explore stock exchanges and brokers. Here are key terms we've discussed. To keep it simple, I won't go into the full definitions here. Instead, I encourage you to head over to my website where, with an email sign-up, you can download the full list of terms and definitions to review at your own pace. Check out these terms: investing, shares, stock, public company, private company, initial public offering or IPO, stock ticker, share price, market capitalization, small cap company, large cap company. Now let's move on to a few questions to test your understanding. Here's a quick 6-question assessment. Define the term investing in your own words. Explain the difference between shares and stock. Describe the difference between a public and a private company. What is the significance of a stock ticker and why is it important? Explain how the price of a share of stock is determined and what market capitalization represents. Why is a lower price per share not necessarily a better deal? Don't worry if you're unsure of any answers. This is a learning process. I've got the answers for these questions available on my website as well. Just follow the link in the video description or the pinned comment, where with an email sign up, you can download everything, the key terms, definitions, and the answers to these questions. And last of all, here's your homework assignment. You can do it right now and it'll take you all of 5 minutes. It will help you put what you've learned into action. Pick any company that interests you, like Apple or Coca-Cola, and answer these 4 quick questions. What is the name of the company? What is the company's ticker symbol? What is the current share price? And share one fact about the company or what it does. That's it. I'll look for your answers in the comments below. No need to be perfect or elaborate, just give it a try. Don't forget to like this video if you found it helpful. Subscribe to my channel for more tips on investing, and check out the links in the description to access additional resources. See you in episode 3, where we'll discuss stock exchanges and brokers.